So this is C, yeah? Or B. If a procedure other than open tendering was used, the reasons for doing so. The reasons for doing so. The reasons for doing so. Then C, if as part of the procurement procedure, 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 anything was advertised. If as part of the procurement procedure, anything was advertised in a newspaper or other publication, anything was advertised in a newspaper or other publication, anything was advertised in a newspaper or other publication, a copy of that advertisement, a copy of that advertisement as it appeared, a copy of that advertisement as it appeared in that newspaper, a copy of that advertisement as it appeared in that newspaper or publication, a copy of that advertisement as it appeared in that newspaper or publication. Then D, for each tender, proposal or quotation. For each tender, proposal or quotation that was submitted, for each tender, proposal or quotation that was submitted, Roman 1, the name and address of the person, the name and address of the person making the submission, the name and address of the person making the submission, the name and address of the person making the submission, and Roman 2, if as part of the procurement procedure, 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 oh, I've read the wrong thing. So we're doing this. No, that is not correct. Roman 2 should be the price or the basis. The price or the basis of determining the price. The price or the basis of determining the price. The price or the basis of determining the price. And a summary of the other principal terms. The price or basis of determining the price, and a summary of the other principal terms and conditions, and a summary of the other principal terms and conditions of the tender, and a summary of the other principal terms and conditions of the tender, proposal or quotation. Tender, proposal, or quotation. E, a summary of the evaluation. A summary of the evaluation. A summary of the evaluation and comparison of the tenders. A summary of the evaluation and comparison of the tenders. A summary of the evaluation and comparison of the tenders, proposals or quotations. A summary of the evaluation and comparison of the tenders, proposals or quotations, including the evaluation criteria, including the evaluation criteria used, including the evaluation criteria used, including the evaluation criteria used. F, if the procurement proceedings were terminated, if the procurement proceedings were terminated, if the procurement proceedings were terminated, if the procurement proceedings were terminated without resulting in a contract, without resulting in a contract, without resulting in a contract, if the procurement proceedings were terminated without resulting in a contract, an explanation of why, an explanation of why they were terminated, an explanation of why they were terminated, then G, a copy of every document, a copy of every document, a copy of every document required by the PPAB Act, a copy of every document required by the PPAB Act, and finally H, such other information, such other information, such other information, such other information or documents, such other information or documents as prescribed, as prescribed. The next we look at committees responsible for procurement. Committees responsible for procurement. Committees responsible for procurement. So, the Public Procurement and Asset Disposal Regulations or Act require that a procurement entity or an accounting officer, so the person in charge, the accounting officer, must appoint committees. Now, this is to ensure transparency. So you have to have a tender committee, you have to have an evaluation committee, you have to have a disposal committee, so that each part of the tender is done in a transparent and open manner. So usually exam questions are asked directly on this committee. So the examiner asks you, can you explain 4 committees appointed by a procuring entity for purposes of procurement and so on. So we have these committees. So if it's within a high school, because a high school is also a government entity, then the principal will appoint committees from among the teachers. So the teachers will sit in, there'll be a few in tender committee, there'll be others in evaluation committee, there'll be others in acceptance committee, there'll be others in disposal committee if the school needs to dispose anything. So these regulations are used in any government entity, whether it's university, hospital, within ministry, within parastatal and state corporations, the same procedures need to be used. So among staff, these committees will be established, the standing committees, so that if there is any tender, it is processed in a manner that is transparent, and accountable. So committees responsible for procurement. So you say, for the purpose of ensuring that procurement and asset disposal decisions, for the purpose of ensuring that procurement and asset disposal decisions are made for the purpose of ensuring that procurement and asset disposal decisions are made in a systematic, corporate, and structured manner. Are made in a systematic, corporate, and structured manner. Are made in a systematic, corporate, and structured manner. A procuring entity shall establish. A procuring entity shall establish. A procuring entity shall establish standing committees. Standing committees from within its members of staff. 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 So you say, the procuring entity shall establish. The procuring entity shall establish. The procuring entity shall establish a tender opening committee. Tender opening committee. Tender opening committee. Tender opening committee. B. Tender evaluation committee. Tender evaluation committee. Tender evaluation committee. C. Negotiation committee. Negotiation committee. Negotiation committee. D. Inspection and acceptance committee. Inspection and acceptance committee. Inspection and acceptance committee. Inspection and acceptance committee. And finally, E. Disposal committee. Disposal committee. Disposal committee. Then the final thing we do in this topic is called the concept of e-procurement. So concept of e-procurement. Concept of e-procurement. Concept of e-procurement. Concept of e-procurement. Then you say e-procurement is an automated. E-procurement is an automated business process. E-procurement is an automated business process. E-procurement is an automated business process which includes e-procurement is an automated business process which includes procurement planning, procurement planning, procurement planning, management of suppliers, management of suppliers, management of suppliers, requisitions, quotations, contracts and receiving of goods, contracts and receiving of goods, which are shifted to a more effective, and cost efficient. which are shifted to a more effective and cost-efficient online platform. Online platform. Then you say the types of e-procurement include the following. The types of e-procurement include the following. The types of e-procurement include the following. A, web-based enterprise resource planning, or in brackets ERP. Web-based enterprise resource planning. I'm an ERP. Web-based enterprise resource planning, in brackets ERP. Then you explain that. You see, this system deals with creating. This system deals with creating and approving purchasing requisitions. This system deals with creating and approving purchasing requisitions, placing purchase orders, and receiving goods and services, by using a software. By using a software system based on the internet. By using a software system based on the internet technology. So a lot of organizations are using enterprise resource planning. I'm an ERP. Some of you may be using them wherever you're working. So it's a common software, enterprise resource planning. Then maintenance, repair and operations. Maintenance, repair and operations, in brackets MRO. Maintenance, repair and operations, in brackets MRO. Maintenance, repair and operations, in brackets MRO. So we say this system deals with creating. And approving. This system deals with creating and approving purchase requisitions. This system deals with creating and approving purchase requisitions, placing purchase orders, and receiving non-product, non-product MRO supplies, and receiving non-product MRO supplies. Then you have C, e-sourcing. To say this system involves identifying of new suppliers. This system involves identifying of new suppliers for a specific category. This system involves identifying of new suppliers for a specific category of purchasing requirements, using the internet technology. Using the internet technology. Then D, e-tendering. E-tendering, then you say, this involves sending requests. This involves sending requests for information. This involves sending requests for information and prices. This involves sending requests for information and prices to the suppliers, and receiving the responses. Sending requests for information and prices to the suppliers and receiving the responses of suppliers using internet technology. And receiving responses of suppliers using internet technology. Then E, reverse auctioning. It's called reverse. Auctioning. Reverse auctioning. So you see, this system uses the internet to buy goods. This system uses the internet to buy goods. This system uses the internet to buy goods and services. This system uses the internet to buy goods and services from a number of known or unknown suppliers. From number of known or unknown suppliers. From number of known or unknown suppliers. Finally, benefits of e-procurement. What are the benefits? Benefits of e-procurement, we end with that. Benefits of e-procurement. Benefits of e-procurement. The first benefit, cost reduction. Cost reduction in tendering. Cost reduction in tendering. Cost reduction in tendering. So you see, under this method, there is no paperwork. Under this method, there is no paperwork. Under this method, there is no paperwork. Under this method, there is no paperwork and other costs associated with preparation and sending of tender documents and other costs associated with preparation and sending of tender documents. B, another benefit, or number 2, time saving in sourcing of materials, time saving in sourcing, time saving in sourcing of materials. Time saving in sourcing of materials. So we say a lot of time spent on paper invoicing, a lot of time spent on paper invoicing, a lot of time spent on paper invoicing, in terms of writing, filing, and postal communication is saved. Filing and postal communication is saved, and staff have sufficient time. And staff have sufficient time, to engage on the strategic issues. And staff has sufficient time to engage on the strategic issues of procurement. And staff have sufficient time to engage on the strategic issues of procurement. The third advantage, reduced administration costs. Reduced administration costs. Reduced administration costs. Reduced administration costs due to reduced paperwork. Reduced administration costs due to reduced paperwork. Due to reduced paperwork. Number 4, reduction in staff costs. Reduction in staff costs. Reduction in staff costs. Reduction in staff costs. You see, since most of the procurement process is done electronically. Since most of the procurement process is done electronically, the number of staff needed to facilitate the process. The number of staff needed to facilitate the process is reduced. The number of staff needed to facilitate the process is reduced. Then number 5, e-procurement leads to competitive advantage. E-procurement leads to competitive advantage. E-procurement leads to competitive advantage. Number 6, e-procurement leads to improvement in communication. E-procurement leads to improvement in communication. Improvement in communication, i.e., it allows electronic documentation. It allows electronic documentation to flow. It allows electronic documentation to flow. It allows electronic documentation to flow through the supply chain. Electronic documentation to flow through the supply chain. 7, it leads to enhanced inventory management. It leads to enhanced inventory management. It leads to enhanced inventory management. So that is the end of our supply management in the public sector or in public entities. So we look at a new topic. We'll call this oversight function. Oversight function in public finance management. Oversight function oversight function, public finance management. Oversight function in public finance management. So, procurement or public finance is a role of the executive. At the county, it's the county executive that is involved in budgeting and implementing of the budget. So there are other bodies that are set up by the Constitution and under the PFM Act for purposes of oversight. One of the key institutions of oversight at the national government level is the National Assembly and the Senate, you know, and at the counties, the County Assembly. Now, the National Assembly plays oversight through committees. For example, the role of oversight by the National Assembly is taken over by the Budget and Appropriation Committee. So the National Assembly would be brought in through reports by the Budget and Appropriation Committee. So the National Assembly has many committees, but we will be specific with the Budget and Appropriation Committee because that is the committee that directly relates to public finance management. Then the oversight function to be played by the Senate will be played through its Senate Budget Committee. So we'll be looking at the role of the Senate Budget Committee. Then there's a very powerful office in Parliament. It's independent. The Parliamentary Service Commission oversees this office. They hire professionals, independent professionals, people who are experienced in economics and finance. Is called Parliamentary Budget Office. The role of the Parliamentary Budget Office is to give information to the committees of Parliament. You realize you could be appointed in a committee of Parliament because you've been elected as an MP, but you could have no idea in matters economics or matters public finance. If people like you were elected, it would be an advantage because an accountant is informed. But the majority of people who are there, even in the counties, you're supposed to oversight the executive, but your level of information is limited. So that's the rule. At the national level, at least, they have an advantage because of this office. It's called Parliamentary Budget Office. They prepare independent reports to those of the executive. It's like a parallel executive. They prepare independent budgets. They'll do independent analysis. They'll analyze every bill that the executive brings to Parliament and inform the parliamentary bodies of some of the risks those bills could pose to the government or even to the counties and so on. So this independent office serves a very important role. They will do separate economic analysis. So when the National Treasury is doing budget policy statement, they're supposed to do their own budget proposals and point out to members of the parliamentary budget committees some of the limitations to allow the members now to be able to interrogate the budget policy statement, budget review and outlook paper, debt management strategy, financial outlook. Otherwise, without this important body, some of the members may not know what to do when you're confronted with figures of revenue estimates, expenditure estimates, debt estimates. Unaambiwa sasa tunataka tuweke 10 trillion. Si unakubali tu because you don't know the alternative. But now this professional office is meant to provide information. So if you see members of Parliament misbehaving, it's because they are mistaken. They think oversight doesn't involve being on any side of the political divide. Oversight is about those in the executive and those in the National Assembly. You're supposed to scrutinize and interrogate every document that comes from the executive and every proposal that comes to help the government run better. But people are of the mistaken view that, for example, if I'm elected under this ticket, then I'm supposed to rubber stamp. No, it's not like that. And there's nothing like, and others have been brainwashed to think that there's something like opposition. In the new Constitution 2010, it's the whole National Assembly. So even if you are elected a member of the ruling government of the day, you're supposed to give an input, an informed input of things as they are. But you see, we have the mistaken thing that I'm supposed to keep silent because it's our people. So Parliament then loses the role of oversight. You think that you are there to rubber stamp bills from the executive, but the Constitution and also the Public Finance Management Act intends that the whole of Parliament plays oversight. The whole of the County Assembly plays oversight. So it's the executive that's doing the work, you know, through the National Treasury. But it is these bodies to check it, to check what they are doing. So you'll be surprised. Like we've talked about here of fiscal responsibility principle, right? And you'll see a budget proposal by the National Treasury. And nobody interrogates things about percentage, say, of the budget that goes to development expenditure, those details. And it's a requirement of the law. You find 70% of allocation is going to salaries. Nobody says anything, you know? While the whole of the National Assembly is supposed to play oversight, supported by some of these bodies we are going to look, like the budget, Parliamentary Budget Office is very, very significant. They prepare independent reports. In Kiswahili, wanachanua parliamentarians. They're supposed to give you a perspective, a different perspective from that of the executive. Wakwambie, hapa mnachezo. See, this policy is going to have this impact, so that when you go to Parliament, you argue from a point of knowledge, not ignorance. So that hata kama wewe background yako you're a lawyer. Even a lawyer is better because a lawyer has been trained to analyze things and reason, you know. There are others whose background may not prepare them for what goes on in the National Assembly. So some of these bodies will play a significant role. So oversight function in public finance management, we start with the National Assembly. So role of the National Assembly. 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 So the whole of the National Assembly and Senate is supposed to play oversight, but they do it through committees. So the Senate is going to have the Senate Budget Committee. National Assembly is going to have Budget and Appropriation Committee. So after this committee has scrutinized documents, they prepare reports, bring to the Assembly for purposes of discussion or debate. So you say the National Assembly has established, the National Assembly has established, the National Assembly has established, the National Assembly has established the Budget Committee, has established the Budget Committee, has established the Budget Committee in public finance matters. The National Assembly has established the Budget Committee in public finance matters, to oversee public finance management, to oversee public finance management, to oversee public finance management. When you say The budget committee deals with budgetary matters. The budget committee deals with budgetary matters. The budget committee deals with budgetary matters and has responsibility for the following. The budget committee deals with budgetary matters and has responsibility for the following. And has responsibility for the following. A, discuss and review. Discuss and review the budget policy statement. I'm a BPS. Discuss and review the budget policy statement and budget estimates and budget estimates and budget estimates and budget estimates and make recommendations to the National Assembly and make recommendations to the National Assembly and make recommendations to the National Assembly. So I'm sure you remember, it is the executive that prepares the budget policy statement. It is the treasurer that tables the budget policy statement by 15th of February of every year. You remember the contents of the budget policy statement, very significant. It has strategic priorities. It has policy goals for the national government. It has financial outlook for revenue, for expenditure, for borrowing. It has fiscal responsibility principles. You know, it has, it has all these matters of significance. Now, the budget committee will scrutinize this document, of course, with assistance from Parliamentary Budget Office. We shall be talking about Parliamentary Budget Office. They are meant to even make amendments, make suggestions to the executive. So it is through guidance of the budget committee that Parliament is able to make changes to the budget policy statement or discuss it out of knowledge, discuss these documents from the executive. So even estimates of revenue out of the report of the budget committee, then Parliament can react to what the executive has done, even make suggestions of amendment and so on, so that the debate makes sense. So Parliament is not meant to rubber stamp. They are meant to look at the financial outlook of revenue, then armed with independent analysis from the Parliamentary Budget Office, they are supposed to make logical changes or make suggestions to the executive. Say, don't you think you are overly ambitious? This is just post-COVID. I'm just imagining Parliamentary Budget Office must have suggested to Parliament a budget of 3.3 trillion is overly ambitious. Why don't you make a budget at our level? But nothing of the sort happens, because you find that even the membership of the committees of the National Assembly are still from the MPs from the same party that is ruling. So they are of the mistaken idea that if you talk about something, then you're being critical. You should just leave things the way they are. But you see, it's the process of the Constitution and the public finance management to ensure transparency and accountability. That's why the BPS also goes to the cabinet. The cabinet is also supposed to look at it, though the cabinet is part of the executive. Okay? Approve before it comes to the National Assembly. National Assembly is supposed to be assisted by Parliamentary Budget Office and make also an independent evaluation of what these things are. But now, when these things are discussed at all those levels, then they appear in the public and we start seeing like they don't make sense. Then it's not that we don't have structures. and institutions. It just means that people they don't play their role. They don't play their role. Because if you look at the budget of like 2021, 2022, what is being spent on salaries and wages is almost the same as what is being spent in development expenditure, over 500 billion. And the same fiscal responsibility principles in Akwambia, salaries and wages should not exceed at least a percentage like 35. Nobody interrogates. Nobody. The figures are there, but you can see the Constitution and even the PFM Act has put in proper structures such that kama kila mtu anafanya kazi yake, we should have had very robust debates on these things. Lakini usikii debate, unasikia tu BPS repetition. B, provide a general direction. Provide a general direction. Provide a general direction on budgetary matters. 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 So anything to do with the budget, it is the Parliamentary Budget Committee that's meant to guide the National Assembly. Like I said, there are so many committees in Parliament, each on its own area. Parliament works through those committees. So a committee of budget is meant to guide the House on matters to do with budget. For everything, they first bring a report of their own analysis. Then the National Assembly can have an opportunity to discuss. So they'll guide anything to do with budgeting, including budgetary allocations to various areas, whether it's subsidy for fertilizer or subsidy for food, subsidy for fuel. These matters are supposed to be guided. The budget committee is supposed to guide the National Assembly on these matters to be able to interrogate what the executive is doing. Then C, monitor all budgetary matters. Monitor all budgetary matters falling within. Monitor all budgetary matters falling within the competence. Monitor all budgetary matters falling within the competence of the National Assembly. Monitor all budgetary matters falling within the competence of the National Assembly and report on those matters. 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 D, monitor adherence. Monitor adherence by Parliament. Monitor adherence by Parliament. Monitor adherence by Parliament, the judiciary, and the national government. And the national government. Monitor adherence by Parliament, the judiciary, and the national government, and the national government, and its entities, and the national government and its entities, to the principles of public finance, 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 and fiscal responsibility principles, to the principles of public finance, and to the fiscal responsibility principles. So I'm sure you remember what principles of public finance say under Article 201. I'm sure you remember what fiscal responsibility principles say under Section 107 of the PFM Act. Now it's the Budget Committee to monitor that these principles and these fiscal responsibility principles are complied with, not just by the executive, not that just by the national government, by parliament also, by the judiciary, you know. All these arms of government must comply with the fiscal responsibility principles and the principles of public finance. So when you hear a matter of debt, you know, and everybody says, we did not know about that, so it is only who knew about the debt. Are they saying the truth? They are bodies, they are institutions, a whole budget and appropriation committee. And do you know who was the chair? Who was the chair of budgetary committee? Do you know? Kimani Ichung'wah was the chairman. They go out there and they say, we don't know about that. It is who? Our politicians too. He was the chairman for 2 years of budget committee. And you can see the role of the national, the role of the budget and appropriation committee is to monitor adherence. So if matters of debt, you think the government is overborrowing, you have a role, isn't it? Have we ever had the National Assembly tell the government, you've exceeded the limits? Instead, they're the ones who approved 9 trillion, and now last year, 10 trillion, the same parliament. The same parliament. Kimani Ichung'wah was the chairman of this body. Parliamentary Budget Committee, you can see part of its role is just to ensure, keep the executive in check, make sure debt doesn't exceed limits, you know, fiscal responsibility principles, you know, and really one of the public principles of public finance says equitable sharing of the debt burden between the current and future generation, you know, all those principles, and they're supposed to be checked by parliament through the budget office. It's a big office. Next, E, review the division of revenue bill. Review the division of revenue bill presented to parliament. Review the division of revenue bill presented to parliament. Review the division of revenue bill presented to parliament and ensure that review the division of revenue bill presented to parliament and ensure that it reflects the principles of the Constitution, and ensure that it reflects the principles of the Constitution, and ensure that it reflects the principles of the Constitution. Now, let me remind you, division of revenue bill is a bill that is prepared by the National Treasury, and it specifies the share of revenue between the national and county governments. Then there is also county allocation of revenue bill, which specifies the sharing of revenue among the 47 counties. And we said in preparing those two bills, you know, they must comply with Article 203 of the Constitution. So Article 203 of the Constitution, which talks about equitable, some matters to consider on equitable sharing, we talked about national interests. So we are saying the budget committee will look at, will examine the division of revenue bill and look at the Constitution under Article 203 and say, does this share consider, for example, national interests, debt? We said debt of the national government, guarantees and other obligations. Does it consider devolved functions? For example, the devolved functions of the counties include health, water, some roads. Okay? When you're giving them 15%, you should also ask yourself, is this sufficient? Is it sufficient considering the functions we have devolved? Can they? Then we also say that Article 203, we also consider the capacity. Maybe you're giving them too much money. They don't have the capacity to handle. That's why utapata county fulani imetengeza gate ya 700 billion. Na wengine wakakuwa na wheelbarrow. Wheelbarrow ilikuwa ya milioni ngapi huko Bungoma? Unakumbuka wheelbarrow? Wheelbarrow ya Bungoma ilikuwa ya milioni ngapi? And Ken Lusaka even was rewarded after that. He became Speaker of the Senate. This is Kenya. So Article 203 inauliza, do they have the capacity? Utawapatia pesa wataanza kufanya pare after pare. Do they have the capacity? So I believe from 2013 when the counties were first set up, they've been improving. They've been putting in place systems, you know, they've been installing IFMIs. I don't know how many of them have installed the integrated financial management information system. But Article 203 requires that first you consider those. Do they have the capacity? You know, do they have the capacity to handle? So those must be considered by the budget committee. Wakiangalia division of revenue bill, wataangalia waseme, division revenue bill, even though it has been prepared by recommendations from the Commission on Revenue Allocation and the Intergovernmental Budget and Economic Council, the budget committee also must play its role. Watajiuliza, je, wamezingatia Article 203? Have they looked at the national interest? Have they looked at the needs of the national government? Have they looked at debt and other obligations to be paid by the national government? Have they looked at the devolved functions, the roles supposed to be played by the counties? Are they giving them sufficient to take care of those roles? Do the counties have the capacity? Ama ni kama kumwaga pesa kwa maji? Do they have the capacity? You know, ama a few pockets will be enriched. Article 203, we talked about it earlier. So all these people playing oversight must interrogate this. You know, wait a minute, you've not considered Article 203. So your bill is not really up to the requirements of the Constitution. So the budget committee needs to do that in its role, in its oversight role. F, examine financial statements. Examine financial statements and other documents. Examine financial statements and other documents submitted. Examine financial statements and other documents submitted to the National Assembly. Examine financial statements and other documents submitted to the National Assembly and make recommendations for improving the management of public finances and make recommendations for improving the management of public finances. So financial statements will be submitted to the National Assembly. They first go to the Budget Committee. Treasury, National Treasury will be submitting reports on implementation of the budget. They first go to the Budget Committee. The Budget Committee will scrutinize, make reports, and have the same discussed in the National Assembly. So if you don't hear debates, serious debates on financial statements, on reports of budget implementations in the National Assembly, it's not for lack of structures. People have been given responsibilities, but people may not carry out their responsibilities the way they are supposed to. Otherwise, if every institution did their part, then Kenya would be a very good place. Kenya would be a very good place. It's not for lack of institutions. We don't need new laws. We don't need new provisions. They're there. So that was F. G, make recommendations, make recommendations to the National Assembly. Make recommendations to the National Assembly on, you can put this in quotes, money bills. Make recommendations to the National Assembly on money bills after taking into account the views of the CS. Make recommendations on money bills after taking into account the views of the CS. So money bills are proposals of raising revenue. So meambiwa kwamba we need an expenditure of 3.3 trillion. Then the same treasury must come up with proposals on how that is going to come. So proposals wanakuambia tunataka kuongeza gas. Okay? Excise duty on gas by 20%. Tunataka kuongeza excise duty on airtime 20%. Tunataka kuongeza capital gains tax from 5 to 15%. Those are the proposals. Sasa hizo ndio zinaitwa money bills. So the budget committee will examine this and they can tell Treasury, look, huwezi kuongeza capital gains tax from 5 to 10. I remember they had proposed that the Treasury wanted to increase capital gains tax from 5 to 15%. Capital gains tax is the tax you pay on gains on disposal of land, property, shares, ama buildings, you know, capital gains tax. It has been 5%. So Treasury had proposed even 10%. I remember the Budget and Appropriations Committee was suggesting it to be reduced to 10%, I think, 10%. These are the so-called money bills, where the funds are going to come from, you know. They made some suggestions. I can't remember the details, but they made some changes. So these are revenue raising measures. Where is the money going to come from? Okay, where is the money going to come from? We're going to increase this tax. You know, did you know that fuel has 9 taxes? The government is not being truthful. The biggest beneficiary in fuel is the government. And they simply cannot stop collecting it because it's the source of revenue. Why can somebody just be truthful? Look, we need this. We cannot survive without this. It is not oil marketers. It is the government. 9 taxes. One of them is VAT. Now, when they first introduced VAT on fuel in 2018, they wanted to put 16%. Parliament had passed it. Wananchi wakanunulia because the government feared reprisals from the public, it was reduced to 8%. But IMF has been telling them, bite the bullet, put it at 16. IMF wanaambia, wacheni kucheza. Don't charge 8% on fuel, put 16. So if these proposals go through, because kama sasa wanategemea IMF for budget support. Unajua wana budget ya 3.3 trillion. Na waezi enda kwa commercial loans. Because sasa inflation, exchange rate, ukiborrow commercial loans, walipiga hesabu wakaona commercial loan, the lowest rate can be about 12%. That's very expensive if you want to borrow big loans. Very expensive. So they have to go back to IMF. IMF inawaambia, yes, tutawasaidia, but kwanza toa fuel subsidy. Ni IMF waliwaambia watoe. You cannot be borrowing and subsidizing fuel. Remove that. Then wanaambiwa hii VAT ongeza from 8 to 16. Hiyo ndio bado wanasleki, lakini wataongeza. So the biggest beneficiary per liter of fuel is the government. It's not oil marketers. Out of 1 liter, government ina collect like 62 shillings. Kama sasa vile fuel imepanda, it's almost 65. Hiyo lita moja unaona. So wakikwambia lita ni 159, out of that, close to 70 shillings imeenda kwa treasury. 9 taxes. Railway levy, petroleum development levy, VAT, excise duty, na zingine zote. 9. So sio marketers. Hakuna kama marketers. That's the truth. Sasa hata IMF wanaambia waongeze hiyo VAT. Wakiongeza sasa hata hatutakuwa na la kusema, tutanyamaza, tutafunga mdomo because it will be too much to bear. So you will not even talk. Okay, so the budget committee can make recommendations. Kuna vitu hata walikuwa wamesema wataongeza VAT, budget committee kawaambia this will not be right. Even food, the suggestion to put VAT on some food items. But you see, food items don't collect much in terms of revenue. No? Sasa hata ukiweka VAT kwa unga ama kwa it's not much, but fuel it is much. Na IMF wanaambia don't pretend you need that money to pay your debts. You borrowed. You're in a deep hole. Where are you going to get revenue? Tell the people the truth. Collect it. It's revenue. Naambiwa hata mmechelewa. Hiyo VAT weka iwe 16%. So hiyo ni money bills. So money bills hata ziko mpaka kwa county. Money bills itakuwa bills ambazo proposals ambazo huyo CEE anaitwa county executive committee member for finance ana letter to collect revenue at the county. Unajua county pia lazima wajitahidi wa collect own source revenue. Tunajua pia wako na madeni kama national government. So lazima pia wao wa collect. So even counties have money bills. Though some counties don't have a lot of scope to collect revenue. Then kuna H. Table in the National Assembly a report. Table in the National Assembly a report containing. Table in the National Assembly a report containing the views of the CS. Table in the National Assembly a report containing the views of the CS. Table in the National Assembly a report containing the views of the CS. Then lastly, I introduce the appropriations bill. Introduce the appropriations bill in the National Assembly. Introduce the appropriations bill in the National Assembly. So appropriations bill is the bill prepared by the National Treasury for withdrawal of money. So lazima ipitishwe by the National Assembly Appropriation Act. So ikishakuwa act together with written approval from the controller of budget. Controller of budget is another oversight body. Wanna approve in writing withdrawal, and then Parliament wanapitisha appropriation bill inakuwa appropriation act. Together with that, the central bank inaweza kubali kutoa pesa from the consolidated fund. So appropriation bill inatoka treasury, but inakuwa brought into parliament by the budget committee. So when it is passed, then treasury can now withdraw money. So appropriation is authority to withdraw money. So without that, money cannot come out. So any question on budget and appropriations committee. So normally questions are direct. Maswali ya budget committee ni direct. Utaulizwa tu, we explain 5 rules of the budget committee. Siniwambia maswali ya public finance ni direct, sindio? Did I tell you that? It's just information. Either you have the information or you don't have. So I'm trying to get one on the budget committee nation. Ni direct, utaambiwa explain. Utaambiwa we explain to rules kama 4 ama rules kama 5 za budget committee na unapata marks yako. Hii ni public, this is different. Wacha nimuoneshe moja ya budget committee. Haya, angalia December 2021. December 2021 ni pilot. December 2021 pilot, question 1A. Question 1A inasema, discuss 3 roles played by the National Assembly Budget Committee or equivalent institution in your country in relation to public finance management, a whole 6 months. Maxita. So like I told you, the direct questions, the exam will only ask you for information. So come up with the information, you have no problem. You have nothing to worry about. Itakuwa direct, kama vile tumeona hiyo, it will just be a direct question. Shida ni kama hujui, hiyo ndio shida. Utasema sawa, nasema nini. Lakini kama unajua, unaona hii ni kazi rahisi sana. Hii ni kazi rahisi sana. Sasa Senate tunataka kufanya. Kuna parliamentary budget committee, Senate pia iko na yake. Inaitwa Senate Budget Committee, hiyo tunataka kufanya sasa. Lakini nimeona ingine nzuri ya procurement kwa sababu tumefanya pia procurement. Angalia September 2021. September 2021. September 2021, angalia question 1C. Ni question kubwa inasema, citing 7 reasons justify why an accounting officer of a procuring entity might at any time prior to notification of tender award terminate or cancel procurement or asset disposal proceedings without entering into a contract. So, kuna reasons why a contract can be terminated. You know, maybe I may discover huyu ambaye anatenda is trying to collude, collusion. You know, some of those illegalities. Mtu amecollude, ama you presented falsified documents, ama some of those reasons. So, direct questions. Next, we look at role of the Senate. Role of the Senate. So Senate pia itakuwa na budget committee yake. Role of the Senate. Role of the Senate. Role of the Senate. And you say there is established a committee of the Senate. There is established a committee of the Senate. There is established a committee of the Senate, to deal with budgetary, a committee of the Senate to deal with budgetary and financial matters. There is established a committee of the Senate to deal with budgetary and financial matters. Then you say The Senate Budget Committee has the following functions. The Senate Budget Committee has the following functions. A, to propose the basis of allocating revenue. To propose the basis of allocating revenue. To propose the basis of allocating revenue among the counties. To propose the basis of allocating revenue among the counties. And consider any bill dealing with county financial matters. And consider any bill dealing with county financial matters. Any bill dealing with county financial matters. B, review the county allocation of revenue bill. Review the county allocation of revenue bill. Review the county allocation of revenue bill and the division of revenue bill and the division of revenue bill and the division of the revenue bill at least 2 months. At least 2 months before the end of the financial year. At least 2 months before the end of the financial year. C, examine financial statements and other documents. Examine financial statements and other documents. Examine financial statements and other documents. And other documents submitted to the Senate. Submitted to the Senate. Submitted to the Senate. And make recommendations. And make recommendations. And make recommendations for improving. And make recommendations for improving the management of public finances. And make recommendations for improving the management of public finances. Okay, then this is D. Monitor adherence by the Senate. Monitor adherence by the Senate. Monitor adherence by the Senate to the principles of public finance. Monitor adherence by the Senate to the principles of public finance. To the principles of public finance and to the fiscal responsibility principles. And to the fiscal responsibility principles. And to the fiscal responsibility principles. So the Senate also has a budget committee. So they will make proposals for sharing of revenue, just like Commission on Revenue Allocation will make proposals and the Intergovernmental Budget and Economic Council. The Senate will also, budget committee, will also make proposals of sharing of revenue between the national government and the county. Division of revenue bill and county allocation of revenue bill must also be examined by the Senate because, as you might be aware, the Senate has a direct responsibility to the counties. So anything related to the counties, that is where the main responsibility is. So they must examine the division of revenue bill and the county allocation of revenue bill. And don't forget, the same bills are also examined by the National Budget Committee. So Parliamentary Budget Committee also examine the same bills to see that the bills are taken into account the Constitution, Article 203. Now, the same bills again are being examined at the Senate. The same Senate is going to monitor adherence to principles of public finance and to the fiscal responsibility principles, but only in the Senate. Remember, the Parliament Budget Committee examines adherence to principles of public finance and fiscal responsibility principles by Parliament, by National Assembly, by Judiciary. So the one for Parliamentary Budget Committee is wider. Senate Budget Committee only examines adherence to the principles of public finance and fiscal responsibility principles within the Senate. Then they'll examine financial statements submitted to the Senate, and make recommendations to ensure there is improvement in management of public finance. So there are statements that will be submitted to the county, to the Senate. But you can see the roles of the Senate, but you'll find direct questions. Ukiangalia past papers, utaambiwa, utaulizwa. She was even asking me, because I think alikuwa ameona the role of the Senate in management of public finance. Either watakwambia Senate ama Senate Budget Committee. Wakwambia Senate, bado unajua tu ni Senate Budget Committee, because the whole Senate does not do it. They do it through committees. The whole of the National Assembly does not play a role in oversight. It is the Senate budget, it's the Parliamentary Budget Office. So akikwambia the role of the National Assembly in oversight, unajua hiyo ni role ya Parliamentary Budget Committee. So next oversight office is called Parliamentary Budget Office. 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 So the National Assembly has an advantage. So you come a county, Parliamentary Service Commission, National Assembly. Ikona Parliamentary Service Commission, just like the Judicial Service Commission. It's an independent body doing a higher staff who work at Parliament. And Parliament has a fund. Unakumbuka tukiongea about parliamentary fund. So they have a fund. The chairperson of the PSC, Parliamentary Service Commission, is the Speaker of the National Assembly. Now, Parliamentary Service Commission can actually hire professionals. They hire professionals and establish an office within Parliament called Parliamentary Budget Office. Now, those who are hired on merit. People with a background in economics and finance of many years, because their role is to make independent analysis from those made by Treasury. So when Treasury is giving us financial outlook, when Treasury is giving us budget estimates, the Parliamentary Budget Office is also making independent forecasts of independent macroeconomic forecast, independent budget analysis, independent budget proposals, and advising the committees of National Assembly so that they can prepare reports to be submitted to the National Assembly. Now, this is important because it will help Parliament through the committees to understand details of documents like budget policy statement, budget review and outlook paper, medium-term debt strategy, estimates of revenue, financial outlook, and other things, so that when they go to Parliament, they discuss from a point of knowledge, so that they are facilitated to properly play their oversight role. So Parliamentary Budget Office. So he's saying the Budget Office is established The Budget Office is established by the Parliamentary Service Commission. The Budget Office is established by the Parliamentary Service Commission, in brackets PSC, Parliamentary Service Commission. So we say it consists of persons appointed on merit. It consists of persons appointed on merit. It consists of persons appointed on merit by virtue of their experience. It consists of persons appointed on merit by virtue of their experience, in finance, by virtue of their experience in finance, economics, and public policy matters, Then you say the responsibilities of the Parliamentary Budget Office include. The responsibilities of the Parliamentary Budget Office include. The responsibilities of the Parliamentary Budget Office include. A, to provide professional services. To provide professional services in respect of budget. To provide professional services in respect of budget, finance, and economic information. To provide professional services in respect of budget, finance, and economic information to the committees of parliament. 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 Then B, to prepare reports on budgetary projections. To prepare reports on budgetary projections. To prepare reports on budgetary projections. And economic forecasts. To prepare reports on budgetary projections and economic forecasts, and make proposals to the committees of parliament, and make proposals to the committees of parliament, and make proposals to the committees of parliament, and make proposals to the committees of parliament responsible for budgetary matters. Responsible for budgetary matters. Responsible for budgetary matters. And C, we end with this, to prepare analysis. To prepare analysis. To prepare analysis. Prepare analysis of specific issues. To prepare analysis of specific issues. To prepare analysis of specific issues, including financial risks. Including financial risks posed by government policies. Including financial risks posed by government policies. Including financial risks posed by government policies and activities. Including financial risks posed by government policies and activities to guide parliament. To guide parliament. Then you stop there. So we'll continue with the other rules of the Parliamentary Budget Office. You can already see they play a very critical role by giving independent view to allow Parliament to properly oversight the executive. But let's stop there. We'll discuss that further in our next class. So muwe na siku njema.